Millions of UK homeowners are sleepwalking into the biggest financial disaster of their lives, and most don't even realize it. Because in 2026, a massive mortgage reset is coming, and the government, the banks, and even the media are quietly ignoring it. If your fixed-rate deal ends before January 2027, this next part could decide whether you keep your home or lose it. Right now, people think the crisis has already passed. They survived rate hikes, inflation, and the first wave of payment shocks. But the truth is terrifying. The real crash hasn't even begun. The largest fixed-rate cliff in UK history is coming, and more than 2.8 million homeowners will fall off it. Many who were paying £700 to £900 a month will soon face £1,500 to £2,000. And the worst part, banks already know. They're tightening lending, preparing arrears teams, and expecting chaos, while homeowners remain blind. Here's what almost nobody understands. The 2026 mortgage reset isn't just a financial problem. It's a structural shockwave that will hit every part of the UK property market. During 2020 to 2021, millions locked in ultra-low rates, 1.2%, 1.5%, 1.8%. These deals kept families afloat and kept the housing market alive. But those cheap deals are expiring together, creating a massive mortgage tsunami, all landing in the same year. When these homeowners refinance, they won't be offered anything close to their old rates. Many will jump to 5% or even 6%, instantly doubling their monthly payments. This isn't a slow drip. This is a sudden, brutal reset. And the terrifying part is, affordability rules are stricter now. Even people who easily qualified in 2021 may fail affordability checks in 2026. That means some won't even be allowed to switch lenders. They'll be trapped on punishing rates with nowhere to go. And that's how forced sales begin. What's coming in 2026 isn't just higher payments. It's the feeling of being completely trapped. Because when people try to remortgage, they're going to discover something they never expected. Lenders won't accept them. Even if they've never missed a payment in their life, strict affordability checks will block thousands from getting a new deal. Imagine this. Your current lender offers you a renewal at 6.2%, but when you try to switch to a cheaper provider, they reject you because your income doesn't meet the new stress test rules. Now you're stuck. You have to stay with your existing bank on a rate you cannot afford, watching your monthly payments jump by hundreds, sometimes thousands overnight. This isn't a theory. Banks are already tightening affordability criteria months before the crisis begins. They know people will fail checks, and they're preparing for defaults. Homeowners think they'll just switch lenders. They won't. They'll be locked in with no escape. Here's where the real danger starts. Once homeowners are trapped on unaffordable rates, the first wave of forced sales begins. People won't call them forced sales at first. They'll say things like, "We're downsizing," or "We decided to move closer to family," or "It's the right time to sell." But behind the scenes, it's pure financial pressure. When payments double, savings disappear within months. Credit cards fill up. Families start choosing between heating, food, and the mortgage. And when the bank steps in, they won't immediately repossess your home. They'll pressure you quietly. They'll suggest selling to avoid arrears. They'll offer repayment plans you can never maintain. They'll send warning letters that feel like ultimatums. Most repossessions in the UK don't look dramatic. They look like families quietly packing up and leaving before the lender forces their hand. And in 2026, this silent wave will grow. Tens of thousands of households will reach breaking point long B. Most homeowners think higher mortgage payments are the main problem. But the real nightmare starts when house prices begin to fall. Because once people are trapped on high rates and forced to sell, the number of listings rises fast. More sellers plus fewer buyers equals prices dropping. And when prices fall, Another problem explodes: negative equity. This is when your home is worth less than your mortgage. If you need to sell in that situation, you can't. You'd still owe the bank money even after the sale. Suddenly, you're stuck with a property you can't afford, can't sell, and can't remortgage. In 2026, thousands will find themselves in this exact trap. Buyers won't rush in either. They'll wait for more price drops. That means homes will sit on the market for months, forcing sellers to cut again and again. And every price cut drives the whole market further down. This is the spiral no one is ready for. The same people who felt safe 2 years ago will be fighting to stay afloat, watching. Most people compare today's market to 2008, but that's a mistake. The 2026 crisis will be worse for one simple reason. In 2008, interest rates fell. Today, they're staying high. Back then, people could refinance into cheaper deals and buy time. In 2026, homeowners won't get that lifeline. Instead, they'll face higher rates, stricter lending, and weaker household savings than any time in the last 20 years. Add falling real wages, higher living costs, and record-breaking debt, and you have the perfect conditions for a deep housing correction. Not a dramatic crash overnight, but a slow, painful squeeze that forces people out one by one. The most dangerous crashes aren't sudden. They're silent. They creep in through arrears, failed remortgages, and desperate sellers undercutting the market. By the time the public realizes what's happening, prices will already be sliding, and the weakest households will be gone. Here's the truth. The 2026 mortgage disaster is coming, whether people believe it or not. But you still have time to protect yourself if you act early. First, check when your fixed rate ends. If it's within the next 18 months, don't wait. Start exploring deals now, not later. Lenders quietly withdraw offers with almost no warning. Second, reduce your monthly obligations wherever possible. Every pound you free today gives you a cushion tomorrow. Third, build a 3-month emergency fund, even if it means cutting back hard. In 2026, cash will be your oxygen. And finally, don't ignore the numbers. If you already know you won't afford your new payment, plan early. Selling before the crash is painful, but selling after is devastating. You can survive this, but not by hoping, not by waiting, and not by assuming things will go back to normal. They won't. 2026 will reshape the UK housing market, and only the people who prepare now will get through it safely.